Hi there, welcome to The Trade. Really great to be here with you to talk everything trading. I'm Nadine Blayney. Let's get stuck in. It is an economic heavy week. We've already seen the Japanese yen gyrating on hawkish comments from the Bank of Japan head, with eyes now firmly fixed on the euro ahead of the ECB and on the offshore yuan, as well as we await a raft of data from Beijing. Let's talk technicals with some charts to boot. Peter McGuire from XM joins me now live via Skype in Sydney. Peter, always a pleasure. Thank you so much for joining us today. Yes, we have the ECB this week, but we also have the Bank of England next week. So how are those currency pairs trading?
Well, good afternoon and lovely to see you, Nadine. You know, when you're looking at yen and you're looking at pound and euro, the three of them have been very hot over the last couple of days. You got that euro sitting at mid 107s. You got the pound sitting at, low 125, 1.25, and a yen 147-ish. So 146 and a half to 147. So yeah, plenty of movement, and that's the exciting time as far as trading the markets, Nadine.
Okay, so we have a euro pound chart to bring up here. Yep. Peter, what are we looking at?
Well, where you're looking at, Nadine, as far as the euro and against the pound, that euro seems to be losing a little bit of its steam. The pound has had a nice move. And where you're looking as far as charts and the consideration of it, there's, all your indicators, as far as your moving averages, your oscillators. They're a chart that's, I think, offering plenty of momentum and plenty of movement in the short term. And it's been quite nice to be a part of that trade over the last, say, 6 to 8 weeks. It's been very dynamic. And you've seen that downtrend, and we're just going to see whether that continues.
Yeah, well, we do have the next chart to look at, just showing where we've seen a lot of daily performance coming through. And what can we discern here from trends, positive and negative?
Well, we've got a client base over 10 million clients, Nadine, and that's global. And that just gives you an indication what they're looking at as far as which markets they're trading long and which markets they're trading short. And it's a little bit of a blueprint for traders all over the world, because the market doesn't sleep 24 hours a day, as we know. And the same market is dealing in Morocco was dealing in Melbourne. So, if traders are short US dollar yen, or if they're US dollar index, or they're long, say, Kiwi US dollar, you just get a little bit of, I think, hand on heart confidence to know that you might be, on the right side of that trade, or with the masses looking at it, I should say.
It looks as if, going on this, that the US 500 overall has regained traction, but should the bulls just be tempered a little bit right now?
Well, they've got to be to a certain point. I mean, the MACD, well, you've got a couple of different charts, and I made some notes there, jumped above its red signal as far as the line from a positive zone. You've got the RSI hovering around 50, so that's the neutral threshold. You've got where you're looking at the market there. If you see continuation and a push above 45.50 and it surpasses that zone, Nadine, then you might see it hit, the 46.06 could be a number to look at. But it's got to get there, and it's got to be there with a little bit of conviction. So we're just at a moment to see whether it has that momentum to move forward. One needs to be conscious, the S&P, it derives, or it's 40% of its global income comes from countries outside of the US. The Nasdaq 60%. So if it's a weaker external market, then that could have a little bit of a handbrake, over the next month or two. We'll just have to wait and see.
Mm-hmm. Well, patience is also a virtue at times.
Oh,
well, talk to us then. Talk about trading psychology, Peter, how you see it.
Well, that's exactly right. I mean, the market, you can't get yourself, I think, tied up, Nadine, that you feel as though that you've missed the opportunity. Because when a market trades 24 hours a day, and they're hugely liquid, so there's no problem as far as getting a seller. You're not as though you're buying a penny stock and there's no one on the other side. These are incredibly deep markets. And the opportunity there is, if you could be long right now, and that's at 237, and in 5 minutes time you could be short. So that's how traders position themselves. They look for the fundamental analysis coming through. They look for naturally the technicals to give them an indication, and then seasonality stays also as far as religious festivals, weather outages, hurricanes, droughts, whatever those impacts can have as far as you could be trading wheat for say. And if it's a late harvest or if it's a slow planting season, then you know that there could be issues as far as at the end of that particular time frame that there could be issues impacting price. And that's what speculators do. They look for those opportunities, and commodities, currencies, and stock indexes allow that.
Just quickly before we've got to let you go, Peter, speaking of commodities, oil. I mean, what is positioning like in terms of oil? Where do you see oil headed, or more importantly, how would you trade it?
Well, it'd be pretty hard not to be long because you're $91 now. It's just hit through 91, Nadine, in the last couple of hours. $91.02 I've got there. So it's about an 8-week bullish, really from the early times of July. It's been one-way traffic. And we've had a little bit of a consolidation, sitting around that 89, 90, 91. But everyone I talk to, the hedge funds, and they're global and certainly across the UAE, they're mindful as far as the cut in production for Russia and with the Saudis. So that rolls out to December. So everyone's saying 95 to 100 is very achievable and may even happen in September, but certainly by October. So that seems to be the word on the street, Nadine.